Good morning, everyone. Thank you so much for joining us today. We're going to go ahead and get started in a couple of minutes. I see a few more people have joined us this morning. Thanks everyone for taking time out of your mornings to join us. Feel free to grab some coffee or some breakfast while we're waiting. We're going to go ahead and get started in about 2 minutes. All right. Good morning, everyone, and welcome to the 9th Annual San Joaquin Valley Affordable Housing Summit, Standing Together by Staying Apart. My name is Andrea Solis, and I am staff to the Housing Collaborative, and I'll also be moderating today's session. We're super excited to bring you today's webinar on building equity, racial equity through housing and community investment. This is a much needed discussion that's needed, especially in the Valley, to talk about where we've been, where we are currently, and where we're headed in the future. So we're excited to bring this topic to you. So just some information about the Housing Collaborative. We are a regional nonprofit that formed out of the California Partnership for the San Joaquin Valley in 2009. We exist to address housing issues affecting low to moderate income households in Valley communities by advocating, building capacity, and collaborating for affordable, healthy neighborhoods and communities. And while typically we like to do these sessions in person, that was not obviously possible this year. So we're super excited to bring you the same resources virtually. And we hope that you can take away some tools and information for your work moving on in the future. So today's session is exciting because we're going to talk about redlining, the history of where the Valley has come from. We're going to talk about some products that are available for communities, like homeownership opportunities. We're going to talk about homelessness and local policies and how everything's affecting one another. So again, we're going to build the stage, build the foundation, talk about where we've been and where we're going. So with that, I'm going to actually go ahead and hand it over to our first presenter. Our first panelist today is Kevin Hill from the National Community Reinvestment Coalition. He'll be talking about the history of redlining and sharing some really great resources with us. Kevin?
Yeah, great. Can you hear me okay?
Yes, we can hear you.
Okay, and I think you're gonna give me the ability to share my screen.
Yes, you should be able to now. Do you see the button at the bottom of your screen?
I do. Okay, so, okay. Is it just, will it let me just share, like, full on, just share my screen how it is, or?
When you click it, it should pop up with the different screens that are available.
Okay, all right, so I'm gonna use this one because I wanted to show my internet. Okay, so bear with me for a second, everybody. All right. So yeah, thank you very much. I'm very glad to be talking with all of you today. We're going to be this is a very, very important issue, and I'm always happy to be speaking to San Joaquin Valley folks. Let me just introduce myself first. I'm Kevin Hill. I'm the CRA manager with the National Community Reinvestment Coalition, or NCRC. I am a born and raised in Fresno, California. I was actually born in a house not far from the Tower District in Fresno. I still consider Fresno my home. All my immediate family live there, and I still am there frequently. So even though I live in the DC area for the last couple of years, I definitely still consider the San Joaquin Valley my home. And we're talking about an extremely important topic today. We're talking about home ownership, and what home ownership really is really access to wealth. I'm sure most people that are attending this panel already know this, but without access to home ownership, it'd be really difficult for groups to or for families to have stability and stability of your home, and also really difficult to build wealth. For most people, the idea of owning a home, that is going to be their most valuable asset. That is going to be the thing that they can use to finance their kids going to college or various other things. It's something that can be passed down from generations. But unfortunately, access to home ownership historically and today has been way more available for people with my skin color than for African Americans and Hispanics. And that phenomenon is called redlining. Redlining is the practice basically of certain neighborhoods, certain people being sort of locked out of abilities to get capital. And today we're talking about homeownership, and that's largely how redlining is played out. But redlining can also apply to small business lending as well. But we'll focus on homeownership today. So you've probably heard that term before, redlining. It's a pretty common term. But what a lot of people don't know is where redlining started. Like, who was the first redliner? Basically. And a lot of people think, that it started in the private industry, that banks a bank somewhere said, I'm going to put a big red section on the map, and I'm not going to put any lending or any branches in that community. That's actually incorrect. Redlining started with our government. The federal government started the practice of redlining. It was a New Deal program. There was a New Deal agency called the Homeowners Loan Corporation, or HOLC. And that government body was designed to buy mortgages during the Great Depression that were likely to go to foreclosure. And it was going to buy those mortgages to prevent foreclosure, because foreclosure has very negative impacts on the family that goes through it, but also negatively impacts city budgets as well. But as we'll get into, the federal government wasn't interested in buying all mortgages. The federal government was only interested in buying mortgages in areas that it deemed to be an acceptable credit risk. And so the Homeowners Loan Corporation actually went to cities throughout the country, including valley cities. We're going to get into Fresno and Stockton here in a bit. And they would go into these cities, and they would give each neighborhood a score. There was 4 scores, and the lowest score was red. That's where the redlining comes from. And if you were considered red, that was considered a neighborhood that the government was not going to insure loans, not going to buy loans from those communities. And as we'll get into, the main thing that made the Homeowners Loan Corporation determine whether a community was red or not was often if people of color lived there. So let's show you some specifics. And as we'll get into, as you can kind of see on your screen, this redlining that happened in the 30s and then got carried out as well in through private industry and things like that, still to this day, these redline neighborhoods in the 30s, statistically, if an area was deemed like redlined by the federal government in the 30s, that characterization is strongly statistically correlated or related to those people in those neighborhoods today having less money and having more likelihood of having bad health outcomes, which can make them like higher asthma rates and things that are more likely, when combined with COVID, to be really dangerous for the health outcomes of the people in those communities. So what we're seeing is that the redlining that was done in the 30s still very relevant to what's going on today and some of the things we're seeing today. So let's get into specifics. And this is something that you can look up on your own time, but I'm just going to walk through quickly some specifics for you. So let's find the maps. This is all available online. Let's go to Fresno first, and then we'll go to Stockton. So, okay. So what you're seeing here on your screen, on the left side of your screen right here, that's the Hulk map of Fresno that the federal government Homeowners Loan Corporation made of Fresno in the 1930s. You will see that there's certain neighborhoods that are red, there's certain neighborhoods that are yellow, certain neighborhoods that are blue, and certain neighborhoods that are green. The blue and green neighborhoods are basically the neighborhoods the federal government was like, yeah, let's buy some loans there. The property is going to appreciate there. We think that's a neighborhood we can invest in. The red neighborhoods are the neighborhoods that the federal government was saying, no, like do not invest in these neighborhoods. We're not putting government resources in these neighborhoods. And they actually have reports that the Homeowners Loan Corporation created about these neighborhoods, which you can read and I will show you. Warning, you're going to see some racial slur language in these reports. This is from the federal government. And I think it's helpful to see the history of how our government viewed these neighborhoods and how they viewed, the prospects of wealth in these neighborhoods. So let's look. I encourage you all, if you're interested, because there's a lot of great information here, to look this up on your own time, but I just want to spend a little bit to pull out some stats. So let's look right here at the west side of Fresno, a redlined area in the 1930s. And you'll see right here, this is some of that narrative I was talking about. This is straight from the federal government in the 1930s. I think some of you are already seeing some of the language I was referring to. And you're seeing, this is how this neighborhood was described by government employees in the 1930s. You're seeing they're noting, the racial backgrounds of the area. They're saying things like little pride of ownership is shown. If people are locked out of getting capital to own, it might make difficult to have pride of ownership. This is just a breakdown. This is really important. You will see this a lot in the government's reporting of redline neighborhoods. No deed restrictions to protect the property. That is referring to the deed of the property doesn't have language in it that forbids the sale to African Americans or Latinos or Armenians or any other group in Fresno that was deemed subversive or less than satisfactory. So they're saying right out that that is something that this neighborhood has a problem, that the loans, the deeds here are not restricted just to white people. So that make it economically dangerous, or economically not something you want to put your money into. So that's kind of the how you're seeing how the federal government, this is redline. This is the beginning of redlining. And you see now, and we break down and we see the stats of how does this play out today? How are redlined areas now doing today? And so we have some stats for you. You'll see here, so social vulnerability. Where my cursor kind of is now shows you a breakdown of the different neighborhoods in Fresno, California. And we'll see that the neighborhoods that were redlined are more socially vulnerable. Well, socially vulnerable is an index created by the CDC. I think we all know what the CDC is these days, Center for Disease Control. And these are areas that the CDC says they're going to need more help when something like a health pandemic happens, because the people, there's just less, people in those neighborhoods are less likely to have, like strong health insurance or lots of savings built up. Like these are the areas that are identified that are going to need more assistance. They're more vulnerable. And we see, these redlined areas. Here's another one. Like you can move what's nice about this report is you can move your cursor over and find it. So you can see there's another redlined area, more socially vulnerable. Redlined areas, socially vulnerable. And then we have this area way over here, least socially vulnerable, was a green area, which was the Homeowners Loan Corporation in the 30s said that's the area, most likely to be good. And largely that meant that's a mainly white area. And there's other things as well. Life expectancy. We see here life expectancy is shorter in these redlined areas today. We're not talking about the 30s. This is today's stats. These redline areas in the 30s continue to have less life expectancy. What are others? Poverty, higher poverty rates. Again, you see that these redlined areas continue to be some of the poorest areas. Asthma. Asthma, if you have asthma and you get COVID-19, very dangerous combination. We can see here higher asthma rates in these redlined areas of Fresno. Let's look at Stockton just to show you one other city. So this is Stockton. The Homeowners Loan Corporation did not actually complete these maps for every city in America. I think it was about 140 cities. So they might not be for all Valley. This might not be available for all Valley cities, but you can still get a lot of information. So let's just picking out. So again, you can see those are in the 1930s. That's the breakdown of the redlined areas of Stockton that the federal government determined we're not gonna buy mortgages. We're not gonna prevent foreclosure in these neighborhoods. And there's one example here that really gets to what the federal government was thinking of people of color back then. You see infiltration of subversive races exists. And again, this is straight out, this is government employees creating these reports and sending them in to their bosses in the federal government. Relief families, that basically means families that get government assistance. And they're saying many. And then you'll see right out here, this right here, no deed restrictions. So again, we're seeing they're flagging, hey, these areas the property here could be sold to non-white people. It's not restricted just to white people. And the federal government is viewing that as a risk. And you'll also see the racial hierarchy of the federal government is establishing. This area is given over to lower racial elements, implying certain races matter more and are higher up on the hierarchy according to the federal government, and certain races are less. And again, just to pull out the stats, you continue to see also in Stockton, higher social vulnerability, higher social vulnerability and higher poverty. So these reports, there's a lot of information here. I will move on now, but there's a lot of information there. And the community, the response to this, I'll put this on my screen now. So you can just see that's my contact information and where you can get these reports. The Community Reinvestment Act was passed to respond to this, to respond to redlining. And it also has its roots in the New Deal, in the Great Depression and the New Deal. during the Great Depression, there was a lot of bank failures. And part of that bank failure was because, if your bank failed and you had money in that bank, back then your money was gone if that bank failed and you had money in it. And so if word got out that, hey, this bank might not be doing so well, a lot of people would go and pull their money out of that bank. And sometimes the bank was doing fine. It was just a rumor got out, but it became like a self-fulfilling prophecy because people were so worried, I got to get my money out. This bank's having problems. So they pull their money out, and now that bank is struggling and is about to fail. So that's why so many banks failed in the Great Depression. And so in response to that, a New Deal program was created called the Federal Deposit Insurance Corporation, or the FDIC, which still is around today. And the FDIC says, as of today, if you have a deposit dollar in a bank up to $250,000, so if you have up to $250,000, if something should happen to that bank, like if we have a unforeseen economic event like the COVID-19 pandemic, your money is protected though. Even if that bank should go down up to $250,000, the government will step in and protect your money, and it's insured. That is why when COVID-19 started and we started seeing a stock market crash, what you didn't see was people in mass pulling their money out of the banks. There was a lot of economic uncertainty, but you did not see people running to the banks to pull out their deposit dollars. And that's because we kind of take this for granted now. We very, very rarely, if you put your money in a bank, are you worried that bank's going to fail and my money's gone? Because since the 30s, we've had that FDIC insurance. So the CRA was passed in '77, and it said, if we're all, meaning us all taxpayers, are going to back up the banking industry with this big public benefit of insuring the deposits, which makes people comfortable doing business with you, then you have to take steps to address redlining. Because that redlining that started with the federal government, the private industry soon followed suit. Because once the federal government said, we're the federal government, we have the full faith and credit of the federal government, and we think because these areas are letting properties get owned by non-white people, which back then was considered very economically dangerous, because they made that determination, the private industry followed, and they would also redline those same neighborhoods. So the CRA was passed to say, hey, this has to stop. The statute says that the banking industry has to be proactive at meeting credit needs of everybody, and that came out of a push. If you go back and look at congressional testimony and the activists that were pushing for the Community Investment Act, they were really trying to get at the banks need to stop the practice of racial discrimination, and the banks need to be evaluated on how they're lending and investing in neighborhoods of color, which were redlined by the federal government and now by the private mortgage industry. And so the CRA, it was passed this way, but also, some of the quirks of the CRA that made it less effective at doing its job is it's a colorblind law. Even though it came out of this racial, let's respond to racial discrimination, they made the CRA colorblind. And that's something that NCRC and myself are actively working on changing, and we've been working for a while. And I'm running low on time, but I will just say, in terms of CRA advocacy, there's a process going on right now. There's a process going on this year, where one of the regulators in charge of implementing the Community Investment Act was really trying to radically change it and really make a lot of changes. And we, NCRC, got involved and worked with organizations around the country to get people to comment and say, hey, some of these changes you're going to make to CRA are going to be really damaging, are going to mean less money going into underserved communities. And also, some of the changes you're describing are not going to address some of the core reasons why we have the CRA. They're not going to increase accountability to banks' lack of loans or investments into underserved communities that were formerly redlined. And we actually developed a proposal, which if there's interest in it, I can get some information to people offline. But we actually developed a proposal to where banks could the CRA could be updated to start evaluating banks on their lending and investments in our most underserved neighborhoods. And we got a lot of comment letters, hundreds, close to thousands of comment letters submitted saying, hey, the OCC should look at this. And the OCC decided not to. the good news is that I will wrap up at this point and get to the other panelists. But the good news is that we're expecting the Federal Reserve Board on Monday, this coming Monday, to vote to start a new process of getting input from people on how the Community Investment Act could be changed to make it stronger, to make it better address issues of racial inequality. And we're anticipating doing a massive another comment push to get more people to say that, yes, these regulations need to be updated to better address this legacy of redlining that we still see having an impact on people's lives today. And if you are interested in that, getting more information on that, send me an email. You can see my email up there on the screen. And also we have a website, ncrc.org/treasurercra, or just ncrc.org. Either of those websites, you can get a wealth of information about this, because we will be doing a lot of organizing and a lot of information distribution about this process, because it really does have a major impact, and it has a major impact in changing and reversing these harmful trends that still are with us today from the legacy of redlining. And with that, I think I am near my time, so I'll yield the rest. I'll move over to my other panelists, but I will still be here at the end for questions or comments, and feel free to send me an email. There's nothing I like more than talking to San Joaquin Valley folks about this kind of stuff. Yeah, I'm glad to be here and look forward to hearing some of your questions.
Thanks so much, Kevin, for framing the issue and providing that incredibly thorough explanation and introduction to redlining. We do have a little bit of time for questions from the audience members, so feel free to add those questions or comments into the chat. We did get a couple that rolled in. So Kevin, if it's okay, we'll go ahead and answer those questions now if that works for you.
Yeah, sure.
So the first one is, government investment specifically refers to who or whom in this instance? Nowadays, government loan refers to FHA, VA, and USDA.
Yes. So the Homeowners Loan Corporation, which was the government body that made those maps, and that's the first instance of redlining. They were a pretty short-lived government body. It was kind of a precursor to what became the FHA, the Federal Housing Administration. And so those maps, oh, it does not like that. Oh yeah, let me go back. So, hang on. All right, so I'll just stick with this one. So so when the Homeowners Loan Corporation determined that neighborhood right there in Stockton was a red line neighborhood, it was saying that this is a neighborhood the Homeowners Loan Corporation is not going to buy loans from. So the Homeowners Loan Corporation was created to buy loans from homeowners that were about to go into foreclosure, and the Homeowners Loan Corporation would step in, they would buy the loan, and then they would change the terms of the loan, maybe make the repayment schedule longer, maybe make the monthly payments shorter, maybe change the interest rate, with the idea of they wanted to keep people in the home. Because if people are in the home, it's better for that person, but it also has benefits for the city, because they can collect taxes. There's maybe less people would need assistance. But when the Homeowners Loan Corporation came in and said certain neighborhoods, neighborhoods that where people of color were living, and neighborhoods where the sale of home ownership wasn't restricted to only white people, it would say, hey, no, we're not going to buy a loan in that community because we don't think that community is valuable. Basically, we don't think the property in that community is going to go up. And we don't think it's going to go up because there's non-white people living here, or there's African Americans living here, there's Hispanics living here. And so that's the kind of investment the Homeowners Loan Corporation was preventing. And that played out. The private mortgage industry then followed suit. So a lot of people think the private mortgage industry invented redlining. They definitely perpetuated redlining, but redlining was created by the federal government.
Thanks, Kevin. Okay, so the next comment we have is that the California Reinvestment Coalition is suing the federal government regarding the changes in CRA from the OCC. Kevin, do you want to comment on that as well?
Yeah, we're suing them too. We're both in that lawsuit. Yeah, I could done a whole hour on the OCC changes. This is really harmful stuff. It's a really a massive rewrite. They really want to change the CRA to focus more on dollar volume, and they want to allow banks to get credit for things like highways and like bridges and tunnels and things like that. And so those things are very high dollar volume. And if we changed from looking at, how much loans are you making to how much dollar volume are you putting out, and we let you get credit for things like roads and stuff that you didn't get credit for before, the dollar volume of mortgages for people that make less money tend to be small, like the dollar volumes tend to be smaller. So they're changing the CRA to discourage the very things it was designed to encourage. It's a very dangerous change. And they've also done it very sloppily. There's certain thresholds that the OCC said we're gonna require the banks to meet this threshold of dollar volume to community reinvestment. And then when we and CRC, we were working together, when we read that and we just asked a simple question: how did you come up with those thresholds? How did you come up with that satisfactory CRA performance? And the OCC couldn't show its work. The people trying to change this, they literally couldn't explain, this is how we determine that would be satisfactory. So that's one of the reasons we're suing, because you can't do that. When you change regulation, especially regulation is important to this, you have to show why you're changing it and why you're changing it to. Like, you can't just make changes because you want to. So we're feeling pretty good that we're going to win that lawsuit, and that lawsuit will then repeal some of these very harmful changes to the CRA that the OCC has been trying to accomplish basically since the change in our president. That's really what started this push to really weaken the Community Investment Act.
Thanks so much, Kevin. Okay, last question is if you can put your email in the chat for the attendees so they can contact you. Great, thank you.
Will do.
So with that, we're going to go ahead and move on to our next panelist. Up next is Rosa Pereira from Self-Help Federal Credit Union to talk to us about current investments in community products and in specific regards to the Valley and home ownership opportunities. So Rosa, I'll hand it over to you.
Thank you. Can you hear me okay?
Yes, we can hear you.
Okay, great. Kevin, I loved your presentation because your presentation is half of my presentation every time I go speak to people. And by speaking to people, Self-Help Federal Credit Union started out 40 years ago, although you folks probably are not familiar with our name. We started 40 years ago in Durham, North Carolina, because of African-American families being discriminated. Our founder, Martin Eakes, was an attorney, and he's a white guy, the greatest guy. He's inspiring, and he built this credit union. We're nationwide, 19 branches in California, and we are a CRA. Our main mission is to help low-income families. The redlining that Kevin talked about, that's who we help. And I've done presentations. I'm either at Westside Church of God, Saints Community Church. We present at a lot of churches, for African-American families. I'm also at the Mexican consulate doing presentations. We also go out to the field workers in the fields. Before COVID, my favorite thing to do was go out to the fields and speak to some of the field workers that need our help. So yeah, Kevin, I just enjoyed your presentation. I would love to have some of your screenshots so I can try to do it the justice that you did with your presentation, but that's what we talk about here at Self-Help. So 40 years ago, our first 100 loans was all to Black families, and that's how Self-Help started. We have since quadrupled that and grown into one of the largest credit unions in the nation. We do zero advertising, so if you folks are, oh, I know who Self-Help Enterprises is, that's not us. We're the credit union, so we're separate from Self-Help Enterprises. But we have 19 branches in California. I had the great honor to be selected as manager of Self-Help here in Fresno. We opened 5 years ago, and I've been 30 years in the banking industry. And this was a different place to be because I come on board and our mission is to help low-income families, African-American, Hispanic, Hmong families, people that don't have social securities. We can get them a wonderful home loan. And so I love what we do. And to Kevin's point, we talk about generational wealth building. I'm on another committee, and I'm also on the board of directors for the food bank, the Central California Food Bank. But when I'm in my generational wealth meetings, we talk about how do families generate wealth is through housing. If you think of most of your relatives that own a home, you know, pretty soon their kids are going to own a home and so forth and so on. But if we block them, which was done years back, if we block them from becoming homeowners, then their wealth is much less than the rest of us that were allowed to have a home and all of those things. So what self-help does is we help mostly African-American families. We have about 70% of our members are considered people of color. 80% are considered low-income families. So since we opened in 5 years, just here in Fresno, we've done $70 million in loans to low-income borrowers. So those red line areas that Kevin's talking about, that's mostly where our loans are. We do have others that come in and because we do have great car loan rates that anybody can take advantage of. But when it comes to our low-income families, for example, an African-American family can come in and purchase a house with us with only a 3% down payment, a credit score of 580, and we charge no PMI. So that's about a $300 to $400 savings on your monthly payment. With my I-10 borrowers, which most of you may know what an I-10 borrower is, it's somebody that does not have a social, they're undocumented, but they're paying taxes without the benefits of paying taxes, let's say. So our I-10 borrowers, we are able to help them purchase a home with their I-10, 10% down, rates as low as 4.6. I know that may seem a little high to the rest of us, but 4.6 is not too bad for a first-time home buyer. We charge no PMI at all, and we are able to help folks with I-10s even if they don't have previous credit. So a lot of them think, oh, I have to build up my credit. I have to go get in debt to then someday afford purchasing this house because I need credit cards. I need all of these things. We are able to help them qualify. We use alternate credit. So, you know, how has somebody paid their PG&E, their utility bill, their rent? We use that. We need 3 lines of alternate credit. We can help them get into a house if their credit score is 580 on up. It's only a 1% origination fee. We do not make commissions or bonuses here at all. So far year to date, just from January to now, we've funded over 65 loans to I-10 borrowers mostly. We do have other folks that come in and, but the majority, I think we have this product that is amazing for our I-10 borrowers. We can also help them buy vehicles. We had a gentleman who was approved for a $60,000 truck in Madera, and because he had an I-10, they gave him a 19.9% rate. So if you can imagine 19.9, a $60,000 truck, he's going to end up paying like $90,000 on it. It was going to be something crazy. And then somebody told him to call self-help. And then so he came over and we gave him a 3% rate, which is what his credit qualified him for. So, you know, we are here to really help all of those at other companies or other banks. We are CRA. So to Kevin's point, because in my old banking environment, I would try to go and volunteer to get CRA points for my bank. Now that I am a CRA, we have actually other banks that deposit here, and their deposits with us count as CRA. So we have like Suncrest, EECU, Fresno First Bank, Central Valley Community Bank. They all have accounts with us because they understand that their deposits here will help us continue our work. Because that's the thing. All banks can't just go out there and do I-10 lending all of a sudden. They don't know how to work it. They don't know, you know, they just don't have the capacity sometimes or the understanding. And we're okay with that, but we do need other banks to help us by depositing here so that we can continue our work. So right now my loan balance sheet is higher than my deposit rate sheet. So we're not worried about that. We're a very solid company. but I'm always out there. Suncrest Bank just deposited some money here after we had an FDIC presentation, and the gentleman from the FDIC was here talking about how we can make our money work to help these low-income borrowers. Self-Help also does commercial lending. We just got approved a church right in the middle of that red line area. We are doing a $1.5 million loan to St. Rest Community Church pastor. His name's DJ Kreiner. He's awesome. And there's other churches in mostly African-American community that we have been able to approve recently. Saints Community Church also, which is over here on Shields by, if you guys are familiar with Fresno, it's near Manchester Mall. So we do a lot of lending where others probably would not. Our mission, even on our commercial lending, is mostly nonprofit lending and definitely church lending. So that's what we dedicate our life to here at Self-Help. The home loans to me are the most rewarding. I've had comments made from someone, we were talking about helping African-American families, and the comment I heard was, well, they don't like to be homeowners, which is totally not true. And we know it's not true. It was a racist comment. Didn't come from anybody that works in my branch. It was somebody that at a meeting. And we also had just recently, and I have to share this experience because I couldn't believe this is what was said. We had a farm labor immigrant family qualifying for a home loan. They had qualified, and the realtor was showing them homes. She was showing them homes in the $190,000 range. This wife, the lady that's the home buyer, looked at the house and she was really sad, and you could tell she did not want it because it was old. It was an old house, outdoor washer dryer system, detached garage. And she looked at it and she says, you know, our apartment is more comfortable than this. And she was right. And the realtor says, you know, for an immigrant family, this is as good as it gets. So we definitely stopped doing business with that realtor, because that to me tells me that he is putting them in this package. Like, you can only live on this side of town and you should only buy, you know, an older home. So my mortgage loan officer, Sarah, ended up telling them to let go of their realtor. We still had their approval letter. We don't make any commission, like I said, but she found them a brand new home for $220,000, brand new granite countertops, you know, attached garage, inside laundry area. She was so happy. She cried. She's sitting here crying in front of all of us, and it makes me teary-eyed just thinking about it, but it was such a cool moment. She comes back with roses and a big bottle of tequila, which was very much earned, you know. So we have stories like that every single day here at Self-Help. So we strive to really help homeowners. And Miguel, we just so you know, Self-Help, we bought a portfolio of loans not too long ago from the Fresno Housing Authority, because the folks that you help are the folks that we help. And so what happened is they had about 35 mortgage loans sitting there. And with the Housing Authority, also they have a deposit here, but what they kept telling me is, we're not a bank. We're not here to take payments. We, you know, so we ended up purchasing that whole portfolio from them and bringing it on over here. And it was super helpful for them because it got it off their books and they got paid, and now we're carrying those loans. But Self-Help is really here to help everybody, everybody that needs help. And one day I was presenting a meeting, and it was funny because Kevin kind of talked on this, you know, how we help African-American families, Hmong, Hispanic families, and we were showing our demographics, and there was one Caucasian man in the room. His name's Rick Lease. He's actually wonderful. He helped us get started here in Fresno, and he says, well, what about me? And I go, well, you can deposit some money to help us help these other folks. And that's what he has done. We have a lot of people from all parts of Fresno depositing money because they understand what we do. And if their heart is in allowing us to help more individuals that are low income, then some of them will deposit their money here. And I always feel the better our low income side of town does, the better we all do. You know, so if we raise them up, we will all be happier and have a better future in our community. But yeah, this is what we dedicate our life to here at Self Help. All kinds of lending, personal loans, emergency loans. The FDIC was here and they noted that Fresno has over 390 payday lenders. In San Jose, they only have about 200. And so these payday lenders know where to open up their business. They know where they're going to make their bank. And what happens is a lot of banks stop doing the small personal loans. We do personal loans from $500 and on up, because a lot of times people just need a little something to help them to the next paycheck. We get that. We don't call ours a payday loan because it's definitely not a payday loan. It's a lower interest rate. Our low interest rates are as low as any other credit union. For personal loans, they start at 9%. But I have seen people take out payday loans at 400% and 180%. The Center for Responsible Lending is a part of Self-Help. And we try to make laws to keep these payday lenders from charging such high amounts. We just got one law passed in January where they couldn't go over 39% of the loan. I can't remember what the loan amounts were, but 39% sounds like a lot still, and it is really high, but it was a win for us because they have lobbyists and they have a lot of money and they're always combating, trying to keep the rates to be unrestricted. And I would love to show you guys an example, and I'm sorry, I wish I had it. We had an African-American gentleman who had signed up. He was desperate. He was losing his apartment and he went to get a $2,500 payday loan. What he would have to pay back is $18,000. And this is a true contract. I didn't make this up. He brought it to me because he was stressing out. And we ended up being able to help him and refinance that at 15% and paid off that loan. That loan actually that made it to Senator Caballero's desk. And she was just taken aback. She didn't realize that loans out there, the payday lenders were doing loans with that high of a rate. And I would love to take some questions too, but one more thing. I always feel here at Self-Help, I meet with a lot of other banks and credit unions, and I love ECU because I used to work there. And I was sitting there with Elizabeth Ryan, I think she's CEO or president. And she asked me, well, do you have a lot of losses because of your I-10 lending? And I said, no, it's the opposite. If I took 100 families that are I-10 and put them in one bucket and my Social Security borrowers in another bucket, my I-10 borrowers will pay better every single day. They are here on the first with their mortgage payments. They come in dirty off the fields right after work because their car loan note is due today. And they feel that they have to make it that same day. So, I love helping our families that other banks normally probably would not help. It gives me a lot of pride. And if you guys ever out there in your daily life feel that there's somebody that you could refer our way, like I said, we don't make bonuses or commissions. And sometimes I get people referred to me and I know what products, because I've been in banking for so long, I'll tell them Wells Fargo has a good product for this, or EECU, because we really don't make commission. I want that person that comes through this door, whether it's a business loan, home loan, personal loan, that they get the best rate, best product that they can have. And sometimes that's not with me, but if you're an immigrant family, an African-American family, definitely we have the best loan products. So I just wanted to open it up for any questions before my time is up. I think I have like 3 minutes.
Thanks so much, Rosa. We did get a comment in that says that they love your story and thank you. But if anyone has any questions, feel free to send them through the chat or the Q&A, or feel free to use your raise hand feature and I can unmute you. But thank you, Rosa, so much for the incredible work you're doing. Those stories are really what makes the difference. And
thank you for having me on this call. I truly appreciate it.
Yeah, thank you. Okay, so if anyone has any follow-up questions, feel free to send them through and we can go ahead and answer them later on. For time's sake, I'm going to go ahead and move on to our next panelist. So now we have Miguel Perez from the Housing Authority, County of Tulare, to talk to us about affirmatively furthering fair housing and development challenges. Miguel, I'll hand it off to you.
Thank you, Andrea. Uh, very grateful to be a part of this panel. Our agency has a very extensive portfolio of different programs that we administer, especially for the size of our agency. So we have about 710 public housing units, 2,800 Section 8 vouchers, and then really where we've made a great stride to increase the availability of affordable housing in Tulare County is through our acquisition or development of other affordable housing. That's about 1,000 units. And most of those units had come through in the past 20 years through our participation in the Moving to Work demonstration, which allows us to kind of have some flexibility in the way that we utilize our Section 8 and Section 9 funds that we receive through HUD. And so with that, we have faced some challenges when it comes down to the development of affordable housing and high opportunity zones, and or reinvesting in communities. So I'll circle back to kind of the effects of the affirmatively further fair housing rule and what that has entailed to our agency and other public agencies or nonprofit agencies that receive federal funds for the development of housing or community development. And just kind of as a personal note, you know, I grew up here in Visalia, California. I was a kid that grew up on the wrong side of the tracks, literally. And so I'm very self-aware of just how powerful the surroundings that you grow up in and how that affects the opportunities that are available to you. And so I was bused to a better elementary school out of our area. And so I often think, what would have happened if I hadn't been bused to another elementary school and had gone to the elementary school that I was supposed to go through and may have not had a lot of the opportunities from an early onset. So I take this at a very personal level. Circling back to affirmatively further fair housing, we were getting ready to enact or work with the final rule that initially got approved through the Obama administration. And it kind of circled back to expanding kind of definition of what fair housing entailed. And so it went from not only making sure that, you know, jurisdictions were not discriminating or engaging in any sort of unlawful activity, but it was also requiring our jurisdictions to take actions to undo a lot of the historical patterns of segregation and types of discrimination that Kevin talked about from redlining. And on the public housing aspect of it, or affordable housing aspect of it, a lot of the public housing that was created through, you know, the 1900, you know, early 1900s to pretty much up to the 60s or 70s, you know, public housing was developed in segregated areas, right? So it wasn't in areas where they were actually providing loans for people of color to move into and so on. So you had these really high segregated areas of people of color or other minorities that lived in public housing. And so that's been a historical problem. Now, for our area, it's a little bit different because we don't have the those type of buildings or those type of housing projects as you do in some of the places in the East Coast or some of the higher metropolitan areas. But we did still see, you know, till today, we still see some of that segregation as far as higher opportunity zones within, you know, in any specific city. So again, the affirmatively further fair housing rule or the final rule was really looking at having jurisdictions take some sort of accountability to really develop a meaningful way to you know, promote actions that would be able to overcome those patterns. And it was really basing on, it was really requiring jurisdictions, there was public housing authority or a local city government to really look at data and make those actions or your plans really be data driven, right? So as we work through that whole process, I think one of the things that we started to find out is we saw pockets of segregation in specific communities that I don't think we necessarily would have, you would necessarily recognize as you move, as if you didn't go through that particular process. Now, the rule itself, we were working with. One of the differences between what we were doing then and doing before we were only required to engage in an analysis of impediments to fair housing. And typically that process was more on a collaborative level with usually your surrounding cities and so on. And I know that we worked specifically with your agency on doing that before. But what I really started to see as we started to engage and when we were trying to meet the affirmatively for the fair housing rule, was really taking a larger scope aspect of analyzing data and analyzing some of the issues of fair housing at a regional level. So I believe when we started looking at this, we were working with all of the cities within Tulare County, and we were working with the Kings County Housing Authority, and we were looking at possibly extending that partnership to Fresno. So not to let the cat out of the bag, but that the rule itself was suspended by Secretary Carson just in July of this year. So, and prior to that, he had already kind of suspended the implementation of that new rule. Now, I will point out that there was some issues with there was a tool that was developed by the Department of Housing and Urban Development that we were supposed to utilize as we went through this assessment. The tool itself wasn't very user-friendly, and it had a lot of deficiencies, and it took a while for them to roll it out. So that process itself did become a little bit administratively burdensome. But I think I really did see that a lot of the jurisdictions were really engaged in that process, and we're looking forward to continuing with that current assessment. So as I noted, the rule itself was suspended on July 23rd. So now we're reverting back to the previous analysis of impediment type of format, where we're kind of just self-certifying that we are following and implementing all fair housing rules and promoting fair housing values. Now, I think the four bigger differences that I find between what we were working on with the FFHA rule that was proposed by the Obama administration and going back to the analysis of impediments. Through the analysis of impediment, there's no formal guidance that provides you on how to go about that, standardizing that framework. So it becomes a very kind of generic assessment of data. The other thing with that too is that HUD itself did not provide us with the data for other surrounding regions. So I think when I speak of what the old FFHA rule was requiring, it was again taking a look at more of a larger scope and looking more at a regional approach rather than just getting data for your particular jurisdiction, which I think the regional assessment is always helpful, especially in an area like the San Joaquin Valley, because I think there's, although there are some differences, there's also a lot of similarities between the populations within our communities that we help. And there's a lot of recurring issues or problems at a lot of different localities we'll see throughout the San Joaquin Valley. The other thing that was going to be nice about the FFHA rule was that for the first time, HUD was actually going to review the plans that we were going to submit. What the analysis of impediments, they don't necessarily review those. You just you certify that you have gone through that process and you produce a report, and that's kind of the end of it. And I think lastly, the main difference and what I really saw that was going to be beneficial was the priorities that were going to be developed through this whole process were going to be incorporated into a city's con plan or into our specific public housing. We have an annual plan because we're moving to work agency. But we're really going to try to kind of marriage those goals with everything else that we were doing. Now, it's the analysis of impediments doesn't necessarily require that or call for that. Now, I do want to point out, I think for the most part, agencies were doing this already, and this is something that public, our agency was specifically has always kind of strived for, and will continue on striving even with the suspension of the FFHA rule and kind of reverting back to what we were doing before. But I think it is important to note that although there was some issues with the way that the previous rule was proposed, specifically with the shortcomings of the tool, I believe it was going to provide a lot of value to what jurisdictions were doing with federal funds in order to, as Kevin pointed out again, kind of break down this systematic segregation that has been there historically before, I was here, or even my parents were here, and kind of really looking back and taking more accountability on that end. And so with that, I kind of want to make a connection back to, as a lot of the constraints or issues that come out through this, this process of assessing segregation and issues that you deal with fair housing, discrimination on a historical basis, how that affects the development of affordable housing. And I'll take it one step further, specifically for our agency. It's not only just the development, but also the acquisition of housing, right? So to me, there's some critical goals that come down with, that comes down to racial equity in the development of affordable housing or development of affordable housing. So of course is removing barriers to develop affordable housing in high opportunity areas. And that to me, it's the most challenging aspect of development. Now, typically you're running into higher costs. You're running into public outcry. So we kind of circle back to, NIMBY, not in my backyard, and running into those type of issues, right? And so that's been hardening. That's been more difficult. And specifically when you're looking at development, I think sometimes we've been able to acquire existing projects or units in a high opportunity area. When they're already there, it's much easier than when you're building something from the ground up, because that's really when the public outcry starts. And I'm proud to say that we have been able to develop some projects in some of these areas. It wasn't always easy, and there was definitely a lot of public backlash, and it took really a lot of support from the particular city government and really looking at educating the public and continuing with breaking down those misconceptions that come with affordable housing or how typically people just label everything Section 8 housing. So again, you have this kind of this goal of developing affordable housing in high opportunity areas, but at the same time, you also have this other competing goal that the Department of Housing and Urban Development is usually pushing, and some of the other affordable housing regulatory agencies, which is the revitalization or stabilization of neighborhoods through targeted investments, right? So we're looking at reinvesting, going into an area that would necessarily be of high opportunity, but looking at building quality housing in there, or providing kind of building that community from the ground up or from the inside out. And so that's probably something that I think public housing agencies are more effective at doing, or affordable housing, other, affordable housing developers. And so usually that process tends to be much more receptive. I think communities themselves want to improve their community, and community organization groups, within that specific community are usually very supportive of that. And the community itself becomes much more engaged in a much more positive manner. And so I know, for example, Self-Help has built some tremendous projects and that have really changed some of those communities for the better. And I think that goes to the process and bringing in the community and getting their feedback and getting to see what they want to, what they need, and what that project should look like or should provide to that specific community. So that's kind of again, there's two different competing kind of goals, right? So it's, you want to build in high opportunity areas, but at the same time, you want to go back and make sure that you are revitalizing those neighborhoods that need that help. One of the other competing goals that you deal with on the development as it relates to racial equity is making sure that you're also preserving and rehabilitating existing affordable housing. And so that's starting to become a challenge as we're starting to see some of our projects become a little bit older. And so making sure that we're going in there and that, our particular project, or a project that, has been built through federal state funding that's, there to provide low income families, that they should be, we discuss here internally, we want them to be the, for it to stand out in that neighborhood, but to stand out for all the right reasons, right? So it's well maintained, it has that curb appeal, it provides, quality housing to the families that need it the most. So that's also another competing value that we work with. Now, kind of going away from development and acquisition and preservation of housing, as a public housing agency, and due to the fact that we have the ability to administer our Section 8 program, which I personally believe has been one of the most effective mechanisms to promote the ability of low-income families or households to be able to move into high opportunity areas. That's through our Section 8 Housing Choice Voucher Program. One of the things that we've been able to do with our particular program, due to our moving to work contract, we were able to revise some of our Section 8 regulations, and where we allow families to move into a home and where they may be paying over 40% of their income. Typically, HUD will cut that off and not allow a family to move into a unit where they'll be paying more than 40% of their adjusted income. We done so in order to allow those families to be able to move into some of these higher opportunity zones. And so, and we've seen great success on families that do that. They move into these higher opportunity areas and have a bit, the ability to have their children and better performing schools, or being closer to their work, and so on. So that's a particular activity that we've been able to entail, or through our Moving to Work program, that I think has been very, very successful. And lastly, kind of just circling back to, NIMBYism and what that entails, I think that's something that we continue to struggle with in our industry. Unfortunately, I don't think right now we currently have leadership that has been able to properly address that with the general public. And if anything, it's been more feeding into all stereotypes of what affordable housing actually does. Most studies that I come across would have actually seen property values typically are retained or even increased when affordable housing is developed, rather than to this whole stigma that it brings down property values and so on. And so with that, I think it's just important that we continue on working with elected officials on emphasizing the importance of promoting affordable housing and the development in high opportunity areas, and working with state and local officials on zoning issues. So I know that we collaborated and were a part of the regional housing needs assessment, or RHNA, to make sure that that assessment is incorporated into the housing elements of a particular city's general plan, which is extremely relevant when it comes down to zoning issues and making sure that there's enough zoning there available for affordable housing. And with that, it's one thing kind of coming up with these plans, but then also making sure that jurisdictions are being held accountable on meeting those thresholds. So I don't have anything else really to. It's kind of just a broad conversation, but if you have any specific questions, feel free to ask, and I'll do my best to provide an answer.
Thanks so much, Miguel. And I think one of the things that we can really take away from everyone's testimonies today is the fact that this is really a cross collaboration in order to undo the effects of redlining. So thank you everyone for your efforts and contributions to that. So if anyone does have any questions, feel free to add it in the chat or send it through the Q&A feature. For timing's sake, I'm going to go ahead and move on to our last panelist of today's webinar. Next up, we have Charles Felix from the Tulare County Health and Human Services Agency to talk to us about some local policy examples and also homelessness. So Charles, I'll hand it over to you.
Thanks, Andrea. And hi, everyone. Again, Chaz Felix, Homeless Initiatives Program Coordinator with Tulare County Health and Human Services Agency. Really glad to be part of this conversation because homelessness itself is often the byproduct of some very complex upstream factors and failures that have been mentioned before, like redlining. So that's one of the reasons it's so difficult to address. So I'm glad that we were able to frame this discussion or my presentation with that those intro discussions, which I thought our panelists did very well on. So just to start off with some data with our local homeless system, for Tulare County, fresh off the stove, we have a 2020 point in time count. We have 992 individuals experiencing homelessness at any given time in the county, which unfortunately is a 22% increase from last year, and even worse, a 60% increase from 2011. So despite the efforts going on, that we're still having challenges across the county and the bi-county region for that matter in getting folks housed. Homelessness itself has generally been seen as a more city type of issue. The vast concentration of homelessness are in the three large cities, Visalia, Tulare, and Porterville. And all those cities experience a significant increase from the prior year in their homeless population. So unfortunately, to add to our unfortunate statistics, we have 70% of our homeless population are unsheltered, which is among the highest in the nation, and 40% are chronically homeless, which means that they have accumulation of over a year of experiencing homelessness on the street, so, and often with a disabling condition. So it's challenging. It's difficult working on these issues. Homelessness is one of the most complex issues, I think, out there because of so many upstream factors. Add to that, we're kind of in a unique situation being a semi-rural, large jurisdiction. Our resources are spread pretty thin. We don't have a large population, so we don't have a lot of allocated resources themselves. And there are just a lot of underlying dynamics and root causes that we've been trying to understand a little bit better in recent years, specifically the role of race and ethnicity in driving homelessness. So one of the things we started doing in recent years is to work closely with our local CSC, the Kings Tulare Homeless Alliance, to do yearly racial equity analysis of the local homeless population to kind of see what's going on there. And we found what's going on in Tulare County is not unlike what's going on in most jurisdictions across the country. We do have racial disparities within the local homeless population, specifically within the African-American community. Typically in Tulare County, they are 5 to 6 times overrepresented in their proportion of the general population, as proportion of those experiencing homelessness. So generally, they represent about 1 to 2% of the county population, but 6 to 12% of the local homeless population. Additionally, we found that whites receive a greater proportion of outreach efforts as identified by our local HMIS, our Homeless Management Information System. So there's some interesting things going on there. Fortunately, it's not across the board disparities that we're seeing. We do have a larger portion of Hispanics to the population than we do within our local homeless population. And in general, in terms of housing outcomes, we see no general trend of positive housing outcomes. So that's things like permanent housing, access to permanent housing, as related to race and ethnicity. So at least there's that we have to rely on. But regardless, the existence of any type of racial disparity within our local homeless system is something we take very seriously. So we, as an agency, in collaboration with our partners, have started to develop a few new responses that we've been excited to implement and really excited to see where they take us. We're doing our best to institutionalize equity in the local system. We acknowledge that the role of systems in perpetuating disparities and driving homelessness. So we thought one of the best approaches we could take is to tackle these issues on the system level. So there's a couple of ways we've gone about doing that. First is targeting financing and local funding opportunities. One of the more exciting things that we've done recently as an agency in collaboration with our partners is to create an integrated NOFA called PHIL, which stands for the Pool for Homeless Initiatives Locally. And so, yeah, we've done a couple of things with that to kind of promote and institutionalize racial equity in the homeless system. One thing we have done is to award bonus points for applicants and projects who do a racial equity impact analysis on their project. So these topics of racial equity, disparities, different things like that, they don't necessarily roll off the tip of folks' tongue in a more conservative region like the San Joaquin Valley and like Tulare County. It's not second nature in a larger, more progressive jurisdiction like the Bay Area or LA County. So I think just starting to have these conversations, introducing these topics, getting these things going and really starting to institutionalize the best way we can by, rewarding folks for their looking into these impacts, looking into how their actions, how their resource allocations, how different things like that impact race and ethnicity, I think has been one of the most promising things we've done lately. So in addition to that, across the local NOFA for those who are actually awarded funding, we do require racial equity training, which is provided by my agency to all grantees. And so we found that a really good way to, like I said, not just to introduce at a higher level within the organization, but to staff who interact with folks on a day-to-day basis. The impact of, their efforts, their actions, what they do, subconscious racism, different things like that, is something that is prevalent in the local homeless system. So we're doing the best we can to help folks recognize that, whether that's at the top-down level or the bottom-up. Additionally, throughout the year, we offer technical assistance on how to use racial equity tools. So if folks are interested in trying to figure out, how what they do impacts race or ethnicity, we make ourselves available for that sense. Throughout the agency, we do have folks who have received specialized training to help identify that and to do these racial equity impact assessments. So we're trying to share our technical expertise in that matter. In addition to that, we just tried to dig deeper than the numbers to further contextualize the local homeless experience. So one of the more exciting things we've done recently at the agency level is this research collaboration with Case Western University in Ohio that takes into account, or that actually takes and analyzes narratives with those with lived experience. So basically what happens is that someone like myself or someone on my team will just have a conversation with an individual with lived experience and ask them what it means to be homeless in Tulare County. How is that different than a different place? Where do you feel safe? What do you do during the daytime? What led you here? All those different types of things that really inform what it means to be homeless in Tulare County. I think there's tremendous amount of institutional knowledge out there that is at our fingertips, but I don't think anyone in our region has really sat down to kind of look at that in a systematic way. And so through this project, we use GIS technology to highlight spatially and temporally significant local areas to inform policy decisions. You know, it's not just about looking at the quantitative numbers, it's about looking at the qualitative lived experience and figuring out how those things interact to really inform us what it means to be homeless in Tulare County, specifically focused on the impact of race, ethnicity in these conversations, in these narratives, and how that drives their lived experience and how that drives how they became homeless. So we're looking forward to doing some more further analysis on that project and really doing a deeper dive into this topic, because it's a very complicated topic and not one that's got a lot of research and focus in Tulare County, but we're happy to be involved in efforts to kind of understand a little bit more the way these factors drive homelessness. So moving forward, you know, there are a couple of unknowns. You know, we're doing our best to figure out what's going on, but there are definitely some pressing questions that, you know, I and folks within our agency want to learn a little bit more about, specifically the impact of cultural insulation on the effects of homelessness in the county. One thing I was a little bit surprised to see when we did our racial ethnicity analysis of the county population is that there wasn't a disparity among the Hispanic population. And I thought that was interesting, and it kind of begged the question, is it because of something endemic or specific to this population that kind of shielded them from homelessness or buffer them from homelessness? We know from, you know, our efforts at the agency that farm worker communities or the undocumented communities, they're relatively tight knit oftentimes. And so one thing we want to explore a little bit further is does that insulate or blur the true rate of homelessness among this population? Is there something about this population that makes it harder to outreach to get the true understanding of rates of homelessness and how homelessness is experienced within that population? So that's going to be one of our topic areas of focus moving forward. Additionally, we're trying to further integrate our racial equity approach in new projects and taking proactive steps to address disparities. I think the first, you know, focus we've been doing in recent years is just try to identify and see what's actually going on out there. And now that we have a better handle of that, it's up to us to use data, it's to use these numbers, these experiences, these stories, these narratives to drive the conversation and make sure that, you know, we're allocating things effectively. So we'll continue to collect and utilize data to ensure informed decision making and make sure that we're doing the best we can to understand what's actually experienced in the population, to make sure that we're doing the best we can to address things at a system level so we're not perpetuating disparities, and just be cognizant of these factors, these dynamics, and really take that as our approach moving forward. So in the interest of time, I'll cut off here and make sure to, you know, make myself available for any questions you may have now or later.
Thanks so much. So we do have a couple questions in the chat, but also if we have any specific questions for any of the panelists, again, feel free to send them in. I'll start off with one of the more generalized questions for all panelists. So what tools and practices that are already in existence should those advocating for affordable housing utilize better to challenge racial inequity? So for example, the Affordable Housing Marketing Plan. Kevin, do you want to start us off?
So I can speak to the tool that I'm really familiar using, and that is the Community Reinvestment Act. You know, as I was saying, you know, the Community Investment Act is largely colorblind, but there are still opportunities to use it to draw attention to if there's been serious disparities. For instance, when a bank's going through a merger, they let you bring in, like, the regulators will acknowledge like the lending data and things like that. And there are some opportunities, even though CRA exams are colorblind, there are, you know, some opportunities there's a section in that exam where they're supposed to make sure that there's nothing racial discriminatory going on. And in the practice of that, though, there are some definite examples of things slipping through the cracks. There was a really egregious example just a couple of years ago in 2016. There's a bank in the South called Bancorp South that was doing lots of really discriminatory things, and the Consumer Financial Protection Bureau fined them like $10.6 million, and they made them change a bunch of stuff. But their CRA regulator, the federal FDIC, at the same time said, this is a satisfactory bank. This is the bank that's doing a good job. And we were like, how could one agency find rampant discrimination and another agency find satisfactory? And the reason is because one agency wasn't looking at race. And I just bring that up as an example of why CRA needs to get stronger. But you can still use the CRA to accomplish things. I've managed campaigns that have used the Community Investment Act to accomplish a lot. We're working on doing this locally. If a lot of you are already working on some of the efforts of the San Joaquin Valley Coalition to start to have conversations with banks about how can we really, get more resources out. And we want to have like candid conversations. We know it's not like there's not a magic wand that's going to solve all this, because it's been built over generations since this is systemic stuff. It's not going to go away overnight. But how can we really, prioritize this stuff and really get at, so what are the stumbling blocks? What keeps obstacles from going out? And that work needs to go out. And then just culturally, listening to Miguel's comments on the NIMBYism and stuff like that, we really need to find ways to really shift that stigma. The stigma should not be on why is affordable housing going on in my neighborhood? It should be, why isn't there affordable housing in my neighborhood? Why is my neighborhood only white? Why is my neighborhood not helping get at this problem, this racial wealth gap? That's the stigma. Like we need to shift the stigma onto that. Like why isn't there opportunity in your backyard? Why isn't there racial, not for just people that look like you in your backyard? So that stuff takes time. But yeah, I went off on a tangent, so that's what I'd say. CRA is definitely a tool, and if you're interested, we have work going on how to use this. But if you're interested in that, send me an email, and I'd love to talk to you about it.
Thanks so much, Kevin. Rosa?
Take myself off mute. Yeah, I agree with everything Kevin said. What I think our mission here, we need to be very intentional with those that we help. We've been criticized at self-help for example, my speaking at African American churches. Why aren't I on the other side of town? We help everybody. We do have a lot of white folks that come in to get cars because we have great car loan rates for the youngsters especially. We are colorblind as far as an application, but we're very intentional as to where I do my presentations. It's either going to be on the west side of Fresno or in the fields with field workers in Reedley, Selma, Fowler. We've done over 250 financial literacy classes in just the 5 years since we've opened. We're at the Mexican consulate. So we're very intentional in our outreach, but definitely when I look at an application, I'm completely colorblind. It's all based on whether they can afford it. And sometimes we get where folks can't afford a home right now. But the thing that's really cool that we work with them, maybe today's not your day or month to go buy a house, but we can get you ready for in 12 months, you can be a homeowner. Because sometimes, especially if we're using alternative credit, if they were behind a little bit in their PG&E bill in the summertime, which people that make good money get a little relaxed with that. So we have 12 months of clean credit. And so we share that with them. So I think with all of us on the group, it's being very intentional of our outreach. And then another thing, it's sad that I was interviewed, for example, by Lupita Lamelli on Univision like 3 times. And I was told, why didn't you talk about the I-10 lending? They don't want us to announce it publicly because they're afraid that ICE might be at our door. So, we have that. They might look at us like, oh, you're only helping, undocumented people, which is not true. We just happen to have a product for them. So we're very intentional, but sometimes in, if I'm doing any speaking or Channel 24 interviewed us or Radio Bilingüe interviewed us, and I can't talk on the I-10 lending, but I'm here talking openly to you folks. But a lot of our business is through referral, and it's very intentional where our outreach efforts are at.
Thank you so much for that. Miguel?
Yeah, so again, I would continue to advocate to engage with the public and kind of going above and beyond just identifying the problems, but also looking at ways to make make changes of the way the stigma that comes with the portable housing. I know that when it comes down to some of the available tools that you can utilize, specifically when you're looking at either the development or acquisition of affordable housing, high opportunity areas, or areas of reinvestment, HUD does have some tools that are available. And again, so those are things that we typically look at, looking at census tracts and so on. So those are some of the tools that we typically utilize, and I would advocate it for others to look at utilizing as well.
Great, thank you. Chaz?
Yeah, just to reiterate what I mentioned before with the racial equity tool that we've implemented or we integrated from, I believe it's the Governor's Alliance or the Government Alliance on Racial Equity. That is a great decision-making tool in terms of any policy decision, but especially when it comes to resource allocation. And so that's what we're requiring, or that's what at least we're providing bonus points for when it comes to new funding coming down for local homeless efforts. And so that includes things like permanent supportive housing, rapid rehousing, temporary situations, more interim situations. All those things have can be approached with a lens of racial equity. And I think should be. So that's a great tool that we rely on to make sure that we're making decisions that are fair and equitable, and we'll continue to do that moving forward.
Thanks so much. So we are at time, but if I could ask the panelists to please put, if you're comfortable with that, put your contact information in the chat so attendees can follow up if they have any other questions after today's session. I want to thank the panelists so much for your time and for sharing your experiences today. I think it was really motivational and inspiring to hear about the work that you're doing to help undo the effects of redlining in the Valley. For attendees, thank you so much for sharing your morning with us. With that, we'll go ahead and close. And we hope to see you all for our next session Monday afternoon. We have regional housing planning efforts underway at 2 p.m. on Monday. Thank you all so much for your time today.
Thank you. This is great. Thank you.